Hello, I am Madani Aryam. In this video, I'm going to talk about my new course, Accounting Help for Small Business Owners. This is lecture 10, Costing and Pricing. Costing itself a separate subject, as there are many different methods to allocating cost to business activities. Charging is the expenses incurred in the production of a product or in providing a service. The price, the amount the customer is willing to pay. The cost incurred to produce the product has a direct impact on pricing and the profit earned by the company. There is a well-known tendency for the small business owners to underprice the item as they believe in having more sales. However, they do not realize that it is risky to underprice, as a business might face a substantial loss. For budgeting and accounting purposes, it is essential to classify the cost appropriately. It is vital to have a proper understanding of direct and indirect damages, the costs, as you need to use that for correct pricing. When you know the exact cost, easy to price your product competitively and accurately. It also becomes easier to implement better practices and explain to the investors as we. Some of these costs and tax deductible when filing your accounts. The terms used in accounting for costs are direct costs, variable costs, indirect costs. So let me say about direct costs first. It is a cost involved in producing the product or service. Direct costs include direct labor, direct materials, manufacturing supplies, wages tied to production. You pay wages for the people who is involved in the production. Variable costs. These costs can vary depending on the number of units produced, such as manufacturing for the purchase of materials. Say if you have been producing all these times, say 10,000 units, you have decided to produce 5,000 units, the cost will vary. That's what it means, variable cost. The wages of employees will be reduced, directly involved in the production. Transport cost. It also demands on the quantity of the goods produced. For example, packaging is variable cost. Therefore, it depends on the number of packages done. Indirect cost. Indirect cost. These costs not directly related to production. Some incidental damages might be overheads. Indirect cost refers to the director's salary, electricity allocated to production, transport, distribution costs, shipping and postage, and some more. Fixed costs. These costs incurred regardless of the seller of the sales, which means if you sell any product or no, cost is borne. Cost is there, cost is incurred, whether you sell or not. For example, these are costs for rent, rates, wages for employees, that is administration employees, depreciation, owner's salary, and drawings. Usually in the service industry, the owner's time not adequately accounted for and neglected. Therefore, it should be there to record owner's time to include in the cost of the service that you deliver. This is all about costing a product. Now I'm going to look at pricing. Before considering pricing, you have to know the market for your product well and research a comparison. Then decide whether you are going to be at the same level like the competitors, others, or to increase the price more than your competitor's price. However, one thing is it is dangerous to be at the same level without checking your direct and indirect costs. Nevertheless, make sure the customer will pay the price that you set for the product. Then you have to know the value that the customer attached to your products, what they are used to buying outside. That's the thing. That's what it means. Attached to your products. In other words, the market value for the product. Maybe you have made a mistake with the cost of producing your product. You cannot overprice your product because of that. Do not undercharge your product or service even if you are desperate to make enough sales. If you are the service provider and new to the industry will tend to undercharge, then also if you realize your mistake, you will not be able to go back to the customer and claim the real value for your service, because they will refuse, and at the end you will lose your customer. That's what it will happen. You will be safer to do market research in checking prices before setting the price. Then when you set the price, give an additional percentage for your profit and arrive at the sales price. However, do not rush and offer discounts because you need more sales. In case of a bulk order, even do not give a refund, do not give a discount, but provide some other facilities like free delivery. Then pricing also depends on the location. It can differ, maybe in the city and maybe in the outside city the prices can differ. That's what it means. Therefore, you need to know the price in your area before finalizing your price setting. I hope you understood. If you are a small business owner, this is really useful for you to set your price for your product. You cannot sell at the purchase price. You have to increase the price because of other costs involved in getting the product to your store. I hope you like these tips and you can use it in your business. If you like this, please continue to stay for the other lectures as well. Thank you for watching my video. Thank you. Talk soon. Bye for now.